Hi students, O-Levels Online presents the video lecture series for other adjustments of financial statements. In this video, we will discuss the first in First-out method's impact on financial statements and its working examples. This video series is helpful for those students who are appearing in Cambridge O-Level upcoming exams, either in June or November, through CAIE or IGCSE 9-1, for accounting 7707, or 0452 or 0985. Let's begin the lesson material. In this slide, we will discuss the impact on financial statements, when we'll record inventory through FIFO. In balance sheet, the first impact on inventory valuation, ending inventory is valued at the most recent, and typically higher, purchase prices. This results in a higher inventory valuation on the balance sheet compared to other methods like LIFO. Let's move to the second impact on the balance sheet. Second impact on overall current assets. Higher inventory values increase total current assets, which can improve the company's working capital position. Let's move on to another impact on the balance sheet. On the equity, higher inventory values can also increase total assets, which subsequently increases shareholders' equity if all other factors remain constant. Let's check the impact on the income statement. Just like a balance sheet, the overall income statement also affects through this valuation. The first impact on the cost of goods sold. Cost of goods sold is based on the cost of older or typically lower inventory prices. During periods of rising prices, this results in lower cost of goods sold compared to methods like LIFO. Let's check another impact. Next impact on gross profit. Lower cost of goods sold under FIFO increases gross profit, as the difference between sales revenue and cost of goods sold is larger. Let's check another impact. The net profit. Higher gross profit typically leads to higher net income, assuming operating expenses and other costs remain constant. Let's check the key considerations for adopting FIFO method for inventory valuation in accounting. The first consideration is inflation. During inflationary periods, FIFO results in lower COGS, higher gross profit, and higher net income. This also leads to higher taxes due to increased taxable income. Let's move to the next slide. The second consideration is deflation. During deflationary periods, FIFO can result in higher cost of goods sold, lower gross profit, and lower net income compared to other methods. The third consideration regarding the financial ratios. The first one is profitability ratios. Ratios like gross margin and net profit margin may be higher under FIFO due to increased gross profit and net income. Secondly, liquidity ratios. Ratios such as current ratio and quick ratio may be improved due to higher inventory values. And finally, tax impact. Higher net income can lead to higher income tax expenses, impacting the cash flow from operations. Let's check the working example. In this working example, assume that a business has just completed its first financial year and is about to value inventory at cost price. It has dealt in only one item. Data are as follow: on January, 10 units bought at the rate of $30 each; on April, 10 units bought at the rate of $34 each; on May, 8 units sold at the rate of $30 each; October, 20 units bought at the rate of $40 each; and on November, 2 units sold at the rate of $30 each, 10 units sold at the rate of $34 each, and 12 units sold at the rate of $40 each. Requirement is, calculate the cost of closing inventory on a FIFO basis, total value of purchases and sales with the help of the given data. Let's move to the solution. In the solution, we observe that January and April entries record in purchase columns, the total inventory showed as $640 at the end of the April. On May, we sold 8 units, but form the first lot that was purchased in January due to FIFO system following. Same practice with the November sale units. First we release the first 2 lots from the warehouse due to FIFO. This whole working shows the total units purchased, sold and closing inventory in hand at the end of the year. Let's move to another example. In another example, assume a company has the following inventory transactions and sales: beginning inventory, 100 units at $10 each, purchase, 1,200 units at $12 each, purchase, 2,150 units at $15 each, total sales, 300 units at $20 each, operating expenses $500 and non-operational expenses $300. Requirement is, calculate the cost of goods sold, sales revenue, gross profit, operating profit, and net profit with the help of the given data. Let's move to the solution. To calculate the cost of goods sold, using FIFO, the cost of goods sold is based on the cost of the oldest inventory first as per working. The calculated cost of goods value is $3,400. Let's move to another solution. To calculate the sales revenue is units multiplied by selling price. As per working, the calculated sales revenue value is $6,000. Let's move to another solution. To calculate the gross profit is sales minus cost of goods sold. As per working, the calculated gross profit value is $2,600. Let's move to another solution. To calculate the operating profit is gross profit minus operating expenses. As per working, the calculated operating profit value is $2,100. Let's move to another solution. To calculate the net profit is operating profit minus non-operating expenses. As per working, the calculated net profit value is $2,100. Let's move to another solution. Overall working for net profit shows the combined workings for all requirements. Positively, you got the clear understanding of the concept of FIFO inventory valuations, its impact on financial statements and related working examples as well. If you have any query regarding the lesson, kindly ask in the comment section of this video. You can download the related formats and lesson material through the link provided below. Thank you for watching. I hope you learned something new today. If you did, like and share video with other people to learn from it. And please subscribe my channel if you want to see more videos like this. Take care of yourselves. I'll see you in the next lesson. Goodbye.